Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. All right, so joining us now to discuss the crypto markets is Marc Lopresti, Managing Director at asset manager The Strategic Funds. Hello there, Marc. So a lot of selling on the markets right now, but where's the bottom, Marc? And where do you see the new support and resistance?
Well, we're looking at around 30,000 as the new support level for Bitcoin and around 2,000 for Ethereum. Unfortunately, getting close to those levels, at least as it relates to Ethereum this morning. But there's certainly a lot to unwrap and a lot to unravel here in terms of what's going on in crypto markets.
Yeah, it doesn't seem like, as I was saying earlier, we're seeing some, I would say, a lot of nervousness in the market in the sense that we're not seeing the buyers come in. Right. Christina talked about Nayib Bukele. He's one buyer, again, using taxpayer money and not his. But other than that, people who are actually investing their own money aren't doing it, and the large investors aren't doing it. Have the institutional investors kind of gotten nervous? It's a lot harder to justify buying Bitcoin when the price has cut itself in half in the past few months.
Well, Lawrence, it depends on your outlook, right? I mean, there are a lot of managers that are looking very carefully to try to see where is that bottom support level, because we think that, on a long-term basis, Bitcoin will continue to go up in value. The fundamental story behind Bitcoin has not changed. And look, I think the easy answer that people are looking for reasons why we've seen these, blood on the internet, as you said in the lead up to this segment, is that it's part of the risk-off rotation, it's inflationary driven. I don't think that's the case. I think that's the easy answer from a lot of armchair crypto economists. I think the reality of it, this is a response to some pretty harsh regulatory tone out of the SEC, as well as the possibility of a USDC associated with that Fed report last week.
I'm sorry, I gotta ask you about that though, because
Sure.
lot of the crypto market, a lot of the trading doesn't happen in the U.S. It happens in Asia, and that has been happening in terms of clampdown on crypto has been happening since the summer when we saw prices also dive tremendously, and since late fall again when we saw the prices fall, and it continues. Has the Asian market dry up, so to speak, the demand dry up? Is that what really, you don't think that that's what's causing it? You think it's American-based, correct?
Well, look, it's not just, where a lot of the trading is happening. It's also where the leverage is. And we're seeing a lot of the declines in Bitcoin, Ethereum, and the top altcoins being driven in part by margin calls. So, yeah, there's no doubt. I mean, Asia is a major component of trading in these instruments. I don't think we've seen demand dry up. I think we've seen traders get smarter, frankly speaking, as we sort of look for those support levels as we open the segment. Where do we see support for Bitcoin? Where do we see support for Ethereum?
Yeah, so is this a buying opportunity, Marc, or are we still headed for a leg lower?
Well, we're definitely treading cautiously. We're looking at that, horrendously named death cross in Ethereum, the 5,200-day moving average, waiting to see how that plays out. But I think we are looking at places where we might add to some positions in the better names as this. We think we're going to start to see the end of this significant decline here pretty soon, hopefully. Not before Wednesday, by the way. Of course, everybody using Wednesday's Fed comments at the FOMC as sort of another excuse to continue this volatility.
Where do you see the greatest opportunity then, Marc?
We like Ethereum a lot. For a lot of the obvious reasons in terms of its use case, its anticipated market dominance over Bitcoin this year, which we talked a lot about the last time I was on the show a week or so ago. And Bitcoin's starting to look attractively priced, but not ready to jump in just yet. Got to see how things play out in these first 3 days of the week.
So what would be the market signal that you would look for that would say the bottom is here? You were talking about margin calls before, but we didn't see the kind of liquidations in the past over the past weekend that we would have seen other times when we had large drops. Part of it is even though we're still kind of heavy, there's still a lot of leverage in terms of futures positions right now. If you look at sites like Skew, which provide the data, it showed just let's say a couple of $1 billion in leverage has gone down, but we're still at about, let's say, $15 billion in open interest in Bitcoin futures. What point does that have to go? Where does that go before you say, you know what, the deleveraging has happened, it's over. Now it'll start to get interesting. It'll start to get attractive. Where is that point? Is it in the leverage side, or is it in the spot volumes? Where do you find it?
Well, it's a great question, Lawrence, but really there's no one metric, right? I mean, we're looking at, the leverage, we're looking at sentiment, the fear and greed index. As you probably know, the needle is pinned firmly in the fear end of the dial these days. So there's really no one indicator that we look at to try to determine a bottom. And it's not so much as trying to call a specific bottom. A lot of people have lost a lot of money doing that in the equity markets over the years. It's trying to determine on a relative basis where we think it starts to become attractively priced versus what we already have in the book.
And
Catch a falling knife, right?
That's right. That is never a good thing.
And I'm surprised that you don't think that this, has to do with the tapering, the more hawkish stance of central banks around the world, and has more to do with crypto regulation. Whereas I feel like some country in the world has tried to ban crypto for the past year or so. So right. I wonder what makes now any different.
Yeah. Well, I asked that same question, and the answer is it doesn't have nothing to do with inflation and the Fed's increasingly hawkish tone. I just don't think that's the only answer, and it seems like a lot of pundits, that's sort of the go-to where people are grappling with an explanation as to why we're seeing these precipitous drops in the top names in crypto. So I think it's not just about that value rotation. I think it's also about regulation. And look, you're absolutely right. A country almost on a monthly or quarterly basis seems to ban crypto mining, crypto accounts, crypto trading. Obviously, Russia next up to bat. But every single time that happens, even though it really is sort of a snake, why did you bite me a type of a response, you do see these very significant and precipitous drops in the major names in crypto. So I think, if history tells us anything, we'll see that again, but then there'll be a recovery.
Although, in all fairness, I mean, I need to point out that the situation in Russia was just their central bank proposing a ban, and not it's a long way away if if their parliament, if the Duma were to pass that kind of a thing. So we got to clear that up there. It's a recommendation, and trying to recommend things to Putin publicly. We know how that goes.
Well, but that's kind of the problem, isn't it, Lawrence? If he decides that this suddenly becomes something that's front of mind, or if it gives him a bargaining chip in everything that's going on geopolitically with the Ukraine, you could see that timeline advance.